Our next guest has issues with the TSX Venture Exchange. He says that until so-called zombie companies are booted off the exchange, retail investors won't fully trust the venture system. For more on what he's seeing and his advice for retail investors when looking at the venture, we are joined now by Mickey Fulp, geologist and editor at themercenarygeologist.com. Mickey, thanks so much for joining us.
Thanks for having me, Amber.
It definitely has been a pain trade on that venture, dogging around all-time lows. What do you mean by zombie companies?
Well, it's not my term. I think John Kaiser's the first one to come up with that. But currently there are about 600 venture exchange, exploration and mining companies that have negative working capital, which means they're not paying their bill, and out of a total float of about 1,200 companies. So you're looking at 50% of the companies that are not viable, are essentially doing no work and are not paying their short-term bills.
And has this always been the case, or is this a situation, to paraphrase Warren Buffett, the commodity tide pulled back and you saw who wasn't wearing any pants?
Or the emperor's wearing no clothes, right? Yes. Well, I think it's always gone on to some extent, but previously when companies had negative working capital, and to meet the listing requirements, they have to have positive working capital of $50,000. They were delisted and moved down to the next exchange, and we have not found this happening during this bear market.
And so it sounds like what you're pushing for is for the exchange to have a little bit more scrutiny with respect to delisting.
Well, that's true, and I think they should just follow their own regulations. But there seems to be some reluctance to delist these companies. And it may have to do with the fact that the TMX group generates a significant number of fees from these companies every year to the tune of $5,200 per year to maintain their listing. And do the math, 600 companies, that's well over $3 million. So being a publicly listed company themselves, I think they have a vested interest in collecting those fees.
Let's pull back the scope a little bit. We were talking about at the beginning of the show this rise that we're seeing in copper, even as the U.S. dollar is strengthening. Is that a rally that makes sense to you right now, especially when you're seeing this is likely to drive up production in some of those lower currency markets?
Well, I think that the base price for copper production, meaning all-in costs, is probably somewhere around $2.50 per pound of copper worldwide. So when the price approaches that level, you're going to see production come off, supply disruption, and the supply-demand balance for copper is always very delicate. It's can go from surplus to deficit, but it never gets very far out of control. So from that point of view, I am bullish on copper. I think the base is $2.50, and despite a rising U.S. dollar index, we've seen continued strength in the copper market relative to other metals.
I want to ask you too about the royalty regime around commodities, specifically the juniors. We were talking about potash and the changes in the deductions they can make in Saskatchewan, but what are you seeing with respect to some of those junior companies that often get hit the hardest when budgets are trying to be balanced?
Well, what we've seen here with what's happened with potash in Saskatchewan this morning is just resource nationalism. The revenues go down, and so the provinces or the countries, whatever you're looking at, tend to raise royalty rates, and we saw that happen in the oil and gas sector in Alberta when the oil price was booming. They raised the royalty rate. So that is negative for the business as a whole. And as far as it affects the juniors, well, most juniors are not in production, so it does not affect them directly, but it does affect venture capital willing to go into those particular industries. All
right, great stuff. Thank you so much, Mickey, for joining us.
Well, thank you very much, Amber.
That was Mickey Fulp, geologist and editor at mercenarygeologist.com.